One.
I know you all get tired of my horse racing analogies, but have to use it. The late money on the close was the dumb money, at least for now. AVGO up, way down after earnings. S&P's down, now up 15 handles. We'll cover some earnings report, but it's all about the jobs number at 8:35. It's a good thing we have Craig Johnson coming on at 8:15 to give us a technical and fundamental look at this market. It's Friday. It's the start of September. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, buy the dippers doing their thing over right. We're up 15 and a half handles, 41.31.50. The buck down a nickel, not a big move there, 103.53. Bonds down a quarter of a point, 121 and a half. Crude, this is a nice move through the 84 handle, getting up here, making a new high of the move, up a buck 04 at 84.67. Gold going up as well, up 540, 1971.30. Silver back above 25. That's up 22 cents at 25.03. In Bitcoin, I don't know what the courts are doing, but Bitcoin futures are down $100 at 26,140. Dennis, the first thing I said to you was, wow, what a close there. A little bit of a rebalance, but buy the dippers are out there. Did you get a piece of anything?
Yeah, there was. And we did have a rebalance at the close there. It was the end of the month as well. MSCI was rebalancing there. A couple stock movers. One stock that I did get on the close, and the way I play these is limit on close. So if a stock gap's down, I get bought, and if a stock gap's up, I get short. Just playing, a few different stocks, and I was actually able to buy DKNG on the close at 29.65. So it was a really good trade. I was able to flip it out. Literally about 10 seconds after I bought it, it was already trading back up at 30. So now it's 30.10 here this morning. So it was a nice flip, a nice quick, like just under 1% trade there on DKNG. So I'll take it. Tough environment. I'll take it.
What time did that come out? That they came out, was that the 350 or was that
Yeah. The imbalances show up at 350, and there was some significant sell imbalances, and some were buys, some were sells. And again, the way I trade, I don't always just take the balance at face value, but if it shows me a huge sell, I'll throw a couple LOCs out there, limit on close. If it does gap down, then I'm going to be long, because typically those moves retrace. Now, if it doesn't gap down, then I just don't get a trade. So I mean, obviously, they could gap down and go lower, but you typically don't see that. Sometimes it can happen, but typically you don't. Usually they bounce back.
Okay.
So yeah, it was good. That was one trade at the close. So we hadn't talked about rebalances in a while. So yeah, it was interesting.
We didn't even mention this one. I mean, it because it's probably not as widely followed of an index, but that's good. All right. Well, let's bring in Money Mitch here, and really two earnings reports to discuss. Mitch, how are you doing on this first day of September?
Ready to get after it, taking shots. That's what you got to do sometimes. I tried to hit the brake pedal for a little while. Now I'm back on the gas pedal and
buying
back to
stocks.
Buying stocks, taking some shots, right? Especially swing trading action. Maybe not too much on the day trading, but taking some swing trades. We'll talk a little bit about
what did you buy? Talk about what you bought recently.
So, of course, I'm starting to dip a little bit back into tech. So I went after two names yesterday. I went after Intel and Salesforce on the pullback.
Okay.
So I like that Salesforce report. I like Intel. And we might as well mention the Intel news that came out yesterday. Of course, the CEO said that the semiconductor giant was above the midpoint for its third quarter guidance. So they said that they were feeling good about Q3 as that progresses, and that came from the Deutsche Bank Technology Conference. So maybe look to see if we get other news from that technology conference. But that's something that definitely caught my attention. So I was able to catch it on the pullback. I got Intel at 35.13 yesterday as it was coming back to 35.
Yeah, I mean, let's see what happens. I mean, it might be trading there right now. 35. We got four highs at the 35.70, 35.74 area. So you get through there, and then you got the high of the move. Nice winning streak for Intel, and maybe it will stop being Intel here on a monthly basis, though. You got to really put 37 in the rearview mirror, two monthly highs, and well, now I got to look at the next month, July and August, looking good here. 37.11, 37.19.
I
And
bought
of
the
course,
Palantir yesterday too. I
oh,
jumped in
Palantir.
half size. Yeah,
Okay.
it's a nice pullback. It got the good support down there at 14. We'll see how it goes. Swing trade for me on this one here too. Just thinking the AI story isn't dead. I feel like this could get, hot again if the AI story continues. Then you got the gift from Morgan Stanley on the pullback here. Like obviously to be
That's what we
determined if it's
said.
a gift or not. But I mean, it was down 10% yesterday here on that cent downgrade there. So I think he got good support in the 14s here. So we'll see.
Textbook move, $2 rally off the low of the move, and we did talk about this one yesterday. It gave back half of that move. We also talk
Yeah.
about as of late fading Morgan Stanley. You had the exact double bottom at 14.50 to lean on. The buyer stepped up at 14.65, and you have an identifiable exit point on this one too. Like you don't need to wait to this thing if it reverses course. You don't. Okay, I'm getting out at 12. Now you can see where the well-defined support is in Palantir, and
It,
nice pullback after earnings.
it's such an interesting market because there's a lot of non-participation in this recent rally here too. Like, obviously Palantir hasn't participated too much, but that got mostly because it got knocked down yesterday. But Square hasn't moved at all. I still look at the Square and think, man, I got the nice support around 55. So I know I'm losing $3. And I'm like, if it starts to, go out of here, and obviously PayPal's, going to trade with it as well. It's a laggard, so that's the one concern is why is it not rallying when the rest of the market's going? But there's a little cup and handle going here, and maybe there's a catch-up trade. I guess that depends, on where this market goes overall. Obviously, 8:30, we're going to get a jobs number here. There's obviously a lot of people who believe that this is just another rally to sell, but I don't know. I'm on the fence here. I'm still sitting with a lot of cash in the long-term portfolio, but stocks that haven't gone yet, maybe there is an opportunity.
Well, do you got your Lululemon pants on? Let's go to those earnings as Lululemon Athletica reports a robust Q2 performance with earnings per share at $2.68, surpassing the estimate of $2.54. Sales of $2.21 billion also exceeded expectations. They provided a positive outlook for Q3 and fiscal year 23, highlighting strong growth in Greater China.
All over the place on the report. And it got
Nice.
hammered initially because the algos are just wrong. It seemed like all the time. It went all the way down to basically where you have all the support down here in the low 360s. What was the low last night, Joel?
59.42.
Oh my gosh, are you serious? Is that right? It got down to 59.42. And look at those lows. Look at your daily now. So go and look, at that
I
top
got it.
right chart. Put a little arrow there. That's right. It went right to that low and bounced right off of it. Not only bounced, and it went up, and it's all the way up to resistance now. So we literally went right back up to the 390 resistance area. So now it's at resistance. It's unbelievable that we went down to your major support for the last 3 months, and now we're up at resistance because she completely bounced and then turned around and went green. Buy the dips. Working.
I wonder what the expected move too was in Lululemon. I mean, to see it.
I'm going to
down
gather it was a lot more than $8.
a lot more.
Because
No,
it's
I
up
know,
$8
but
right
I'm
now.
talking. Yeah, but I'm talking when it dropped 20.
Let's go look.
Right? Yeah, it dropped 20.
I'm on the move.
Yeah, you know what I'm gonna do on this one? I mean, I know that we missed it. Whatever, we could see the 360 again, but I'm just this monthly's just staring at me here. Look at the last 2 months, and now we're starting the new months right here at this 395 area. We're $5 away from it. If that's it. I mean, those two monthly highs are a dime apart at 394.50. I mean, you cannot argue that above that it's a major breakout. getting a running start today, already up $9. You're going to need a good jobs report and a favorable market. But Lulu on the verge of breaking out on the monthlies.
It was 30 points, it looks like to me. Just quick look at it. If I did my
Okay.
math right there, 13 and 17. So under it. Again, I don't know who's his premiums. It's so hard to make money. I just keep reiterating. If you learn anything from the show, it's so hard to make money buying options. And that's, basically just, it's lottery tickets of Wall Street. And there's a lot more people who make money selling options than they do buying options. Obviously, I had Nick Shaheen on this show for a very long time. He's specialized in selling options. My buddy Chris, he's specialized in selling options for the last decade. I mean, and they make good, consistent money doing it. I mean, obviously they have huge losses at certain points in time, so you can't get over leveraged. You can't get too much, but just consistently writing options is a better strategy than consistently buying options.
Jay said the expected move was 22. If that's the case, I don't have my option
No,
chain up.
I don't think it was. Okay, so I just looked at it. So
The
big
380. So what was it? Because it went out at 381.26.
here. Hang on. I'm
Okay.
going to add it right up here. I'll do the math. So how you do this, again, we teach this. Go to the options chain, look at the close. Went off at 380, grab the closest strike. So we got options expiring today. So we can grab those. And if we look at the 380 puts, they were going for 14, and the 380 calls were going for 380 calls were going between 15.10 to 15.65. So 15.40 call it. And the puts were $14. So about 29 bucks, 29 and a half.
Okay, a little bit.
So it was a little bit bigger than what the market moved.
Okay.
I'm just adding up the calls and the puts at the close.
Right.
So
Okay.
Price don't lie.
Price
like
don't
you're
lie.
adding it up. Unless they weren't trading at all, like they were just. But I mean, I can go to the next strike and it's 16 and 12, and the next one is 14 and 15. So 12 and 6, 17. Everything's adding up to $30.
Gotcha. Okay.
Broadcom
All right.
now. Let's go to Broadcom.
Oh,
Broadcom
what a
strong Q3 earnings per share of $10.54, beating the $10.42 estimate. Sales of $8.8 billion also exceeded expectation. However, the stock did dip a little bit as slight revenue guidance for Q4 missed the expectation here, but now starting to catch a little bit of a lift here. Could this one come back?
Yeah, I think so. I think there's an AI story here. So I've talked about this stock being reasonable play, like reasonable valuation, trading 18, 19 times. I think it's expanded since then. We were talking about this stock down to like 830, 840. Obviously got up to 922 yesterday. And again, the strategy of being long stocks ahead of the reports continues to pay. Selling them before they report. But that thing ran for 3 days ahead of the report. Ran from 8 and maybe market effects, but I mean, you still can't lie with you can't argue with the performance. 856 to 922 and 3 trading sessions ahead of the report. And then expectations maybe just a little bit too high. It was sitting up here at its all-time highs. And you get a little pullback here, but does this pull on Nvidia? Maybe wait for a couple days, try to consolidate, and then eventually start getting bought again. I think so.
Wow. When we were looking at this one at the closing print, I said, well, your 2-day low is 879.11, right? I'm sure a lot of people, after seeing it trade, over 920, they wouldn't mind seeing there. You got to 77.34, and then boom, you got a nice bounce, still down $30. I mean, right now there's sellers at 880, but I think there are buyers at 880. I bet you they'll be stepping up here in the regular session, but people just got way too giddy about the report and got stuffed. So I don't think you're just going to pop right back up, because you do have people that bought into the momentum, waiting for that thing to go to 950, 960, and they're probably looking to parcel out a little bit today.
MongoDB shines in Q2, reporting earnings per share of 93 cents, outperforming the estimate of 46 cents. It's a pretty good beat there. Sales of 423.8 million also beat the expectation. They project strong growth in Q3 full year 24, raising their outlook significantly here. Getting a nice little pop. What do you guys think about MDB?
It's not a stock I trade. I don't know why. I never trade this stock.
Me
It's in
neither. I
my
haven't traded
filters.
it in the
It's
past, at
400.
least.
I
But
mean,
it's
these
maybe it
$400.
is, but I don't mind trading like I'll trade AVGO, so I do trade these stocks here. Maybe its liquidity is a little bit less. I don't know why. I don't know why I never trade the stock, but I mean, you're still in what range here? The range has been really over the course of the last 3 months, 440 to 350. You're in the middle of the range. Sometimes
Yeah.
it's just no trade. Sometimes it's just like, 400 is a logical point where it might run into resistance. But I mean, in the pre-market, it went up to, or after hours, went up to 415. So it's come off those highs here, but sometimes there's just no trade. Sometimes you need to take a pass.
Yeah, I was going to say the technicals on this one.
Tough.
It did get to 418, so it has pulled back quite a bit off that high. 400. I'll just give it, since we're close to 400. I'll give you the daily high, the August 7th high at 405.30. It did trade well above that in the pre-market, but now we're $10 away from it for MongoDB.
The only thing I can see is on the weekly and daily, I see like kind of a cup and handle pattern. So that's actually a pretty decent pattern there. And then I just look for it to hold the weekly support around 363 now. That's just the way I see it on the weeklies. Sentinel-1 impressing in Q2 here. And I wanted to think about this also with other cybersecurity stocks. So we've been getting their earnings. Of course, PanW started it off with their surprise earnings on that Friday. Impressive Q2 with adjusted earnings per share at a loss of 8 cents, surpassing the loss of 14-cent estimate. Sales of 149.4 million exceeded expectation. They raised full year 24 revenue outlook and reflecting confidence in their performance. What do you guys think? Can Sentinel-1 finally get off the ground?
Stock always disappoints, and last quarter was just a disaster. So maybe they weren't expecting as much this quarter. It went from $20 to $14. Now you start getting back up. You think about a potential gap fill if we can get into that area here,
That's a
but
lot. Yeah.
long ways
It,
away.
Yeah, it did get to 1933. That gap fill comes in way up here at 1990. But I would rather. Well, look at the way I'm looking at this one. I'd like to see if we could come and build a base over 17. Right, we're over 17 right now, 1733. Maybe not necessarily a gap fill, but for this to have a meaningful run, and just today, tomorrow, next couple days, if you could build some support over that former resistance, at least for now, $17. But this has been the perennial laggard. We're 12 minutes from the jobs number, and we have Mr. Johnson in the green room. So let's get to him before that big jobs number. Mr. Johnson, Chief Market Technician at Piper Sandler. Let's get right to it, Craig. Nice rally here to end the month of August, heading into September. Jobs number. Where are we at technically?
We're having we're having a slight little mic issue. It's probably on our side, Craig. If you could just do me the favor, I'll walk to you right quickly. Wheel at the bottom settings. Let's go to the audio and then the mic. It probably deselected your normal default mic there. You just see the little green dots moving once you select one that works. Sorry about that, guys. We'll get him on in just 2 seconds here.
He's grabbing it.
I think I heard him.
The suspense.
All right, how's that? Is that better?
There he is.
All set, Craig. We're all set. Let's go.
All right. Sorry about that, guys.
No, that's on us.
So from our perspective, as we look at this big picture of the market, we had recently raised up our year-end price objective to 48.25. Everybody still tells me why this market cannot work. And as I continue to keep looking at all the charts, all the data, I continue to keep seeing things that are working. You guys were talking about MongoDB. You were talking about Sentinel-1. I would agree. I would pass on Sentinel-1 at this point in time. But the chart of MongoDB, I kind of like how we've made the bottom and we're starting to work our way higher. You were talking about NVIDIA. Again, everybody got freaked out about that earnings report where the stock sold off. But the truth is, when you talk to some of the large institutions, they were really they had very full positions in NVIDIA. And they were using that as a liquidity event to move some stock. And the reason they had to sell it, they own too much of it. I mean, there are rules and regulations with these big firms that you can only own sort of X% of the portfolio in your top 5 or 10 or 15 stocks. And they got to a point in time where it's grown so much they had to trim it back. So I think that was sort of a misleading sort of event that happened with NVIDIA. I think the chart still looks great, and we still own it in our model portfolio.
Greg, what about the fundamentals with NVIDIA here? Because it's such an interesting case of, the valuation has scared people away of this stock, but because the earnings are growing so quickly, the PE is actually coming lower as the price goes higher. You rarely see that. I remember that happening with Apple back in like 2010 and 2011, where the price simply couldn't keep up with the earnings growth because iPhone was growing so rapidly. And we know what happened over the course of Apple over the next, decade. The price just kept going.
Yeah.
Is this like another case where AI is just going to be so strong that this E is going to grow, continue to grow, and this apparent valuation that scares everybody away is going to continue to potentially get cheaper?
Does it have to be just AI, or could some of the crypto business come back for them too? So it could be a combination of things. But what I would say about NVIDIA is I wouldn't try to overthink it. The chart still looks very constructive. Yes, you are very far above a rising 200-day moving average, but you're nicely above your 50, and you're very nicely above a 20-period moving average too. So as long as you stay above moving averages, I wouldn't try to overthink it. I think all of us here recognize that the longer-term outlook for NVIDIA and the end markets still remain to be very healthy and very constructive. But, one other thing to think about too is with AI is take a look at the chart of ACN. So Accenture. So every C-suite individual out there is like, what does AI mean for my business? How do I think about it in terms of a SWOT analysis, right? Strength, weaknesses, opportunities, and threats. And they don't know. They don't know what AI really means for their business. I think there's going to have to be a lot of consulting projects getting done. And Accenture certainly could be a play in that. And you take a look at the longer term chart, and it is definitely a chart that's bottomed out and starting to turn higher, and certainly doesn't trade at the lofty valuations and arguments that you've got for NVIDIA and other names. So this could be another kind of way to play it, but really ties into the C-suite because they're all confused what AI means.
Craig, big thing in this market is rotation, right? Growth versus value, and we know that growth is dominated. Over the years, there's been periods where value has crept back in. Still, the interest rates hovering over, but I mean, what are you seeing as far as this rotation? We're starting to see the growth picking up a little bit. Some of the value is still holding in there. I mean, are we finally at another run here where growth is really going to come into play? Maybe if rates just stay steady, not necessarily have to go down. What's your prospects just overall for the rotation, a much more bigger rotation into growth?
Well, let me answer the question kind of with the interest rate aspect that you just mentioned. As I look at the very long-term chart, again, way longer than most people are thinking about, I'll look at the 40-year chart of the 10-year. I know that when you reverse a long-term secular downtrend like that, you get an initial surge, and then you ultimately pull back and you retest sort of where you reversed at. That would suggest to me that 10-year bond yields could be trading down toward 3.25 by year end. And from my perspective, that's a huge move from where we are here. And if you look at the correlation between 10-year bond yields and the S&P 500, it's still highly inverted, that correlation, which means that equity markets would work, growth stocks would work. And that's exactly what I think will happen into year end is growth will work. I just don't think it's going to be necessarily the large cap names that are in its entirety, the Magnificent Seven, working to push it higher like we saw in the first half. If you pull up a chart of like Microsoft on your screen, I would argue that Microsoft, great company, nothing wrong with it, great play on AI too, but you look at how it's sort of come off the highs and it sort of needs to consolidate. It needs to rest in here for a little bit. And if you were to look at a relative strength chart of this, you'll see that the relative performance of Microsoft has started to fade a little bit, which means to me that you're going to get into year end more of a mid-small cap advance for tech than the large cap. Same sort of setup is happening with Apple too. Now, not to contradict myself, but to point out a little bit of a differential, Alphabet certainly looks constructive on the charts. There's nothing negative to say there. And then Tesla still looks terrific. It looks like it wants to take the next leg up. So it's going to be, I think, more of a selective market, but with Apple and Microsoft sort of needing the rest, this is where I think some of that money can come down cap and sort of push up stocks like Confluent. CFLT is another example of a pretty decent looking chart to go out and trade too.
Greg, you mentioned the 10-year at 3.25. What's the path to that? Is we absolutely whooped inflation and my economy is already slowing down and the Fed needs to pump more liquidity in there? Because I don't see a lot of predictions for that by year end. I mean, we're heading into September. Wouldn't that just take a monumental pivot from the Fed and kind of opposite of what they've been saying?
Well, the economy is slowing, to a degree at this point in time. And if you look at what we just literally have done in terms of 10-year bond yields, we literally went right up to 433, 440, 433, 434, and now we backed off to 408, right? Like this was like a week and change that we saw that sort of correction happening. What's it going to take to get there? I think more evidence that the economy is slowing. I think more evidence that the inflation is starting to have its impact. Keep in mind, we've got the fastest and largest number of rate hikes from the Fed that we've seen over time. And again, this is going to start to bite. It's going to start to have an impact. And I think as we initially start to see that happen, the 10-year bonds will come down. Equity markets will react positively for now. Now, if the deflation word comes out at some point in time, that's going to bring an end to the equity advance. But that's not today. That's not tomorrow. And a lot of the portfolio managers need to sort of chase this market into year end. And that's sort of exactly what they're doing. So a lot of these issues that people are pointing out probably are more like a first or second quarter issue for 2024 than they are now. And hence, there's a window of opportunity for equities to work as the 10-year bond yields come down.
All right. I want to drop in a quick one here before we get our job numbers. Craig, what about financials? Because I'm starting to see the banks coming down. I'm a little bit concerned that we could go back into some regional bank concerns. And of course, if we could get this lift off in financials again, I would definitely go back, look into tech. But that's the only thing that I could see maybe, ruining this kind of bullish action that we've lately seen.
Yeah, I mean, what I think about with the financials and thinking about it on an absolute and a relative basis, first, if I look at like a chart of like JP Morgan, is there something really wrong there? Yeah, not really. The stock is still trending. The relative has been a little bit more sideways. And so it's like the financials are sort of more sideways consolidating. But what do you want to do with like a MasterCard, right? Like everybody talks about the consumer having issues. I see MasterCard breaking out to basically all-time new highs. Yeah. I come through and I look at the Visa. Yeah. Same sort of scenario with this too. If we also come in and look at some of the more regional banks, Fifth Third as an example.
Craig, I'm sorry to interrupt you here. We got the jobs number coming at 8:30. You're more than welcome to stay on with us for it if you want. It's your call here. We got to let Triple D head into the trade cave there. So we do have
keep Craig on. If Craig's willing to stay, keep him on maybe to analyze this. But let's get Mitch to preview it quickly and then get Craig's analysis after.
I'm happy to be here.
Great. Fantastic. Okay, go ahead,
Excellent.
Mitch.
Excellent. Let's go ahead. Let's get delivery here. Of course, they're going to be coming in. The expectations are that we're going to get an added 170,000 jobs last month. Let's take a look at what we're about to get here. And of course, like always, let's see if the jobs number actually moves us. Lately, it hasn't been doing too much action here. So definitely going to take a look to see if we finally get the spike that Jerome's been talking about for a while, but I don't think we'll get it here. Let's find out. Looking at 170,000, prior was 187,000. So expected to actually come down, right? So let's see what we get.
Okay, boy, the algos are all over the place. We've had some pops, we've had some drops here, though. But looks like we're gonna get a weak number is what we need, right? S&Ps have just taken out Thursday's blowback
187.
side. Go ahead.
187. Ooh, look at that. Craig's fast, man. Look at that. Boom. Craig got it here. 187 coming in versus 170,000 estimate prior 157. What do you think about that? We'll go to Craig's first outlook since he was that quick.
I guess putting up a good jobs number suggests the economy is doing fine, doing better than people think, and it sort of adds a little bit of credence to the soft landing scenario out there for those folks.
Mm-hmm. Yeah, and we can maybe even go back to what you were talking about. So I know Sydney wants to hear a little bit on finishing that statement on FITB and the regional bank outlook. So we'll let you finish that outlook since we're not seeing too much off this.
Yeah, and also to say too is that if I look at the 10-year post the jobs number, we were at 408 before the announcement. We're now at 406. So we are seeing it coming down even on that stronger job number. So. I think we also had, so the unemployment rate is up to 3.8% from 3.5. So I guess you are seeing some of those jobs numbers come down. Now, the question is, I don't understand when you go up 187, then you get the unemployment rate to go down, to go up to 3.8% from 3.5. I'd have to dig into it deeper. But at this point in time, I think
that one's a little hard.
Yeah, I think the reaction is, things are okay. Things are better than we think. And I think that's what I would take away from this number. And let me take a look and see what the futures are doing.
Yeah, futures got a nice pop. We've taken out that, as I mentioned, that high from yesterday, 41 and a quarter. Just stalled a little bit at our August 10th high at 44.75. I mean, to me, this kind of goes along with what the Fed's saying that, things are not too bad out there and we got to be careful. We may not, still strong economy. So I think just stable rates. I don't know what we're going to get, in the September meeting here, but we hit 45. That's a good number up here. So far, they're liking it. Yesterday, they did like the number and we kind of faded off it. So, everything's fine then, Craig, right? No matter what the Fed does, you can't kill this economy.
It seems to be sort of a dovish sort of a dovish unemployment number, I guess, is sort of what it looks like, right? Like, does the Fed really, how's the Fed going to have to react to this number here? Now let's take a look and see what the Fed Fund futures tell us. Give me one more second.
Sure.
So looking at the Fed Fund futures, you've now got the probabilities for a rate hike in September at 11.3%. For November, you're at 35%. And if you compare this to where we were yesterday, you were basically unchanged. Mm-hmm. You were basically at 11.8 yesterday, and you were at 36. So your probability actually came down 1 percentage point for the November numbers. So again, sort of a non-event as you put all these pieces together. And 10-year bond yields coming down.
So do you see it as, Craig, do you see it as almost a given that we'll still just be at the current rate policy at the next meeting, maybe looking towards November for that jump?
I have some people. So the answer to your question is yes. I think it's a pass at the meeting on September 20th. And the odds are 35% for one in November. So you have to be thinking that it's a pass and then potentially done sort of scenario. I mean, there are some schools of thinking out there that suggest that the Fed may already be done. And what's interesting is if the Fed is done and they're at this sort of level and they're going to stay there for a while, they historically stay at that level for about 8.2 months before you get your first cut. And what's interesting with that for equities is equities usually rally almost 13% during that 8.2 month period, looking back to the 1980s. So if that is indeed the case, there's still a window of opportunity for equities to work, and these growth orientated names, Joel, that you had mentioned, are still going to continue to do well.
I think this just puts a punctuation point on stable for longer. Not necessarily, everyone's like
Yeah.
higher for longer. And I think that this environment, people are just going to have to get used to this current interest rate environment. I mean, the Fed still has plenty of bullets in the chamber if we do see some weakness, but things are here to stay. Craig, thanks so much for coming on. I know you've had a busy morning over there at Piper Sandler, coming with us, giving us your technical and fundamental outlook on the market, and staying through the jobs number with us. So we really appreciate it. And we'll be dialing you up later in September.
Happy to chat anytime, guys. Have a great day.
All right, we'll get Craig out of here. We'll go back looking into the markets. That was a decent reaction off of the number there.
Yeah, it's kind
didn't
of
even
like,
expect it, but it's
yeah, it
jumping.
was kind of like a bad, I guess it's like a bad number because it was a good number, but it's a good number because things are still okay with the, with the
August
economy.
unemployment went up to 3.8%, so that's also something to think about here too.
Yeah, but I mean, I don't think it's anything negative really, because it
I
just
think
shows
we're
that
back
the
in this,
Fed's plan's working, right?
Mitch. I think we're just back in this market where bad news is good news and good news is good news. But it's a
Okay.
sentiment. Bulls are back in control here. They grabbed it 4 days ago. Where bears look like after the Nvidia party that they were going to take it. And, obviously had the bear parade happening there. And we've just turned around. We've turned around on a dime. And it's not just Nvidia here now. I mean, you got the IWM that just in 5 days went from 181 up to 191. I mean, that's really no AI in that. So, I mean, this is across the board now. They're buying stocks here again.
Yeah.
And this market just is very resilient. This consumer has been very resilient. We know this consumer finds the money to spend, even if their, payments are higher. And again, it's maybe not as much of an issue in the US where they got the fixed mortgages for 30 years, but in a lot of other places, they're getting squeezed on these interest rates, but they're still finding ways to spend. You go out and it's busy. So I don't know. Am I chasing stocks here though? I don't ever chase because somebody in the chat just said it. This market always gives you another chance. And I mean, this is the one thing that traders do so much is that they fear that I'm not in the market. I've got to get in. It's going to go up without me and I'm going to miss everything. There's always another ship ready to depart. You just got to go find that next ship. If you're chasing stocks, that is in the long way a good way to ruin your trading career. Chasing stocks, 23 years of professional trading, making literally my entire, life off of trading. So I've never really had another, obviously I worked construction when I was really young, but I mean, since I turned 22 years old and started up Bright Trading when I was 22, this has been my full-time job is trading. And the first thing, I talk about that story, the kid beside me chasing everything and watching him lose. I learned so much by him losing so often just by chasing stocks. So right now, if you're coming in and buying today, you're definitely chasing. But that doesn't mean you can't be bullish. It just means that if you're not in, wait for your opportunity and then get in because you always will find another opportunity. But panicking at this point and saying, I got to get in. I got to get in because the S&Ps went up, 7% here in a week. I got to get in now because they're going to go up another 7% in a week. You typically usually get 7% in a week and then you don't get another 7% a week. Maybe I'm exaggerating I just ballparked 18 points. So it's 5% a week. But I think just, don't panic if you're, in a lot of cash here right now. I have a lot of cash here right now. There's opportunities and I think you're going to have more opportunities.
Someone asked for like an example of a stock that you're not, you're not chasing.
Well, they're
I mean,
all chasing. If you're buying
well,
anything,
no. Well, at the beginning of the show, you talked about Palantir.
Yeah, I bought the dip in that.
Yeah, you did it. You haven't chased that one, and then you also you're definitely not chasing Square. I mean,
I'm not
I don't
in
know
Square, but I look at this and think, yeah, it hasn't left the
Right,
station. So you're
right.
right. You could go and nibble into those ones too. But I think what I'd like overall is you have your shopping list, you get the pullback, and you get in. And we were expecting a pullback in August. We topped
We
it.
got
We
it.
timed the market perfectly. My biggest mistake is I don't get back in quick enough. And I bought a couple of stocks, but I really didn't buy enough. I bought Unity, which was a good buy. There's a couple other ones. Remember, I went shopping the one day. Unity. I can't remember what else I bought, but
Unity looks perky here. If it could, if
I
it's
I think the
38.
Unity's going to go. I think Unity's going to have a date with 40 here again. So it
Yeah.
does look. It doesn't look like it hasn't won too far yet. I mean, it's up about 10% in a few days here, so it is up. But I just think just have your shopping list ready. The one thing with trading and even investing, because as an investor, and people say, well, I'm long term, it doesn't matter. Well, at the time of execution, you're all traders. Warren Buffett is a trader when he's buying a stock. So why would you not want to get the best possible price? Why would you want to, pay up 10%, then watch it fall 7, 8%, and then you're like, well, why the hell did I just pay up? So I think just we're not in this market like 2020 where you buy stock that's up 10% because it's going up 20%. I don't think we're in that anymore. And that's why I just think I don't panic is what I'm trying to say. If you're sitting with a lot of cash, you're still getting paid. I mean, I get 5.5% getting paid on the sidelines on the cash that I have. But I think, just jumping in and saying, I have to own this market right now because it's going to go without me. There'll be some headline, in a week or two, and you're going to get another shot again. Or pick on those stocks that haven't gone yet.
Well, you talk about potential headlines. I mean, we do have some inflation numbers coming a little bit later in the month, right? I believe September 13th and 14th. So we'll get, we've been on a great run fighting inflation here, and we'll see if that will continue. S&P's just made a high at 46 and a quarter, so still chugging along. We did break that 4-day losing streak. Or 4-day winning streak was just a blip on the close yesterday. But Bulls still in control. I got a stock for you not to chase, Dennis. Dollar General.
Oh man. And there's certain pockets to just stay away from. And buy the dip, maybe comes in here, tried to come in yesterday, and then the analysts are downgrading it here today. And a lot of people are arguing the Dollar General. But we've been arguing margins are probably getting squeezed on the low end. We can say there's a trade down effect where some consumers are getting strapped for cash and maybe going down there, but you're not really seeing it. And then obviously, there's labor costs have increased for them. The prices is probably hard for them to raise prices at certain, especially some of these fixed dollar stores. I know Dollar General is not one of those, but Dollar Tree is. So I think there's just places to stay away from as well. And I'm just not interested really in a lot of these, retailers. And there's certain ones that are working, but it's been tough overall, the retail. I'm more interested in tech stocks, to be honest, because that's what's, and again, not chasing here, but there's certain stocks that have come back off the highs significantly.
Of course, I got 2 downgrades today. Raymond James and Evercore ISI group downgrading the stock. Raymond James lowered their price target to 160, and Evercore stuck with neutral and price target of 150. So we'll see what happens with that one. And you wanted to take a look at Lulu?
Yeah. Oh, no. I was wanted to put that up on the chart. Sorry about that. The only thing I just wanted to mention, the only thing I wanted to mention about this Dollar General, and we talk about the pre-market lows and off the open, and there's a lot of risk off the open, right? Because the market makers are waiting to get stuff to lean on. But this is just an instance where you had, I want to get the data window up here. You had the pre-market low in this right at like 128.40. It opened right there. So if you were shorting this in the hole looking for 120, basically, and it's hard to think a stock that was down that much that it went straight up from the open. But that was one. There's some opportunities, on the opening using let me see, the pre-market low was made in the final bracket at 128.30. The low in the regular session was 128.48. So I just wanted to point that out as, if you're going to go contrarian and do something on big stocks like that, that are having big moves, the open is a good opportunity to do things. S&P's now starting to leak just a little bit. Still up 23 handles though at 45.39.
Ollie's is one of the interesting charts in discount stores. Just to state, it's kind of different than this, but of course they're not $1. They're probably a little bit more expensive than dollar stores, but interesting chart to see those dollar stores down so much, but yet Ollie's being able to hold on here.
Well, there's obviously certain pockets of retail that are just working really well. We talk about TJX. We talk about Walmart is at all-time highs. There is certain pockets.
Find the pockets, right? Find those
Find the
pockets.
pockets that are working. But also, what's Walmart have? It has pricing power. You know, you got Dollar Tree that's trying to operate at a fixed price, meaning, you know, they were dollar stores. Now in Canada, I know they're like $1.50 or something like that, or $1.25. So they've even broke the buck because they have to, because they can't sell anything for $1 because they can't get anything for $1. So, I mean, Walmart passes these prices on. Kellogg's raises prices. It shows up at the Walmart store. They just pass it through. So you've got to look at which companies have that pass-through power. And again, maybe we're coming out of the inflationary environment. It's not going to be as much of an issue going forward, but it sure is an issue still right now because prices of everything have come up substantially. Labor costs are still going up here. And it's still hard to find employees. I mean, you can see what the jobs numbers and stuff. It's still, you know, the employees still got power here. So they're asking for raises and they're getting them. So there's just margins getting squeezed. But Walmart has the power to pass that through. I've never been in an Ollie's. Maybe they've just figured it out, but there's certain pockets of retail, and they obviously have figured it out because the stock's almost at all-time highs. So it's just certain pockets of retail that have just figured it out better than other pockets.
Dell Technology. Let's take a look there. Demonstrating its strength in Q2. Earnings per share of $1.74, beating the estimate of $1.14. Sales of $22.93 billion also surpassed expectation. The CEO emphasized their ability to generate cash and create value for shareholders.
What a move here for Dell again.
Dell,
you talk about
one
some
that I wanted
companies
in
that
the pandemic. This is an investment, man. It seems like.
Yeah, well, then they take it away from you when the stock goes down. I always complain about that back. And I complained about that yesterday on the show too. I own this stock in the long-term portfolio. I always complain about it, and it went down, down, down in the financial crisis. And then I'm like, and I was like at $8. It had been up at 50 and 8. And I was like, I'm holding on to Dow because the valuation is just a joke down here right now. I'm like, the stock is going to come back eventually. And what's he do? He takes the whole company private at 11. So I'm like, I'm taking out. There's nothing I can do. My stock's gone. I was like, I did not vote for that, but there's a lot of people that did vote for it. So I'm still pissed off at Dell for that. And now you look at it 62, and so it's a great investment until it goes down a little bit. And then Michael Dell takes the company private again, and then takes you out at the low. So he was a genius. He made all the money off of his investment.
He did. I remember when that happened. I don't know what the expected move is in this thing because it's really not a big mover stock here. So you're up $7 on this one, trading at the highs of the pre-market session. That's at 63.28. Still bid on pretty good volume. So I think for this one, just make sure you key on that pre-market high. Make sure you get follow through on it. On the other hand, if you have 63 as a target, waking up and Dell's up $7. I don't know how many times it's done that over the past few years, but I'm a Dell guy. I got a Dell here. I got a Dell here. I got really old Dells under here. I've always been Dell guy.
I've had some Dells in the past, and I don't know, and I've been sticking with Hewlett Packard. Maybe I got to go back to Dell.
All right, we'll do a little ticker time. It's Friday, right? We're here for you guys, but like always, you must hit the like if you're taking part in ticker time. So if you guys are throwing up those tickers, hit the like down below. Let's get to some of the stocks. I did see a lot of people mention how Disney's not doing well.
Gosh,
yes, it's not doing well, guys. I see next stop for that. I see it maybe going down there to 80, but that's just my outlook.
I've been saying about 80 and it's not just your outlook, it's the outlook of the market here, Mitch, because this is telling you. And sometimes, and remember, I was bullish Disney for a long time. I was bullish Disney saying, I think eventually, they're going to figure some of this stuff out. But then, you looked at the scenario and the parks were firing all cylinders and the other businesses just kept not doing well. And Disney Plus wasn't doing well. And, we know the Fox acquisition was just a disaster. And we talked about all the problems at Disney. And I'm like, if they ever lose the parks, it's going to be in real trouble. So this is what's happening is the parks aren't doing as well as they were probably 3 months ago. So now you got problems here. So, I mean, Disney's a no touch for me at this point in time. It will be a buy at some point in time, but right now, no thank you. Plasma's short it. Good job, Plasma, being short the stock here. I sold the rest of mine on that last pop when it got up to like the 101, 102 and then when they announced Iger was coming back. And I was like, I'm out. I'm like, I don't want Iger. I wanted somebody new. I wanted fresh blood. I wanted something else. So, and they brought back Iger for the next couple of years. And I'm like, I'm not going to sit here and wait 2 more years for the same guy trying to figure it out. And they say, oh, well, he wasn't there for a while and all the problems were created when he was gone. I don't know if that's the case. So I just wanted to see something fresh and something new. Disney's is a broken story until somebody else comes and fixes it. I don't think Iger's going to fix it.
Yeah, they had the Amazon talks, right, about stream. I mean, they've had what I thought were, a couple positive catalysts, over the last couple days, and now they're hit with a negative catalyst. They're having some problems with Charter Communications on their distribution
Just a
deal.
disaster.
Disney declined the proposal. Technically, we talked about the setup on this one for a long time, and you can't get interested. Technically, I mean, all those lows at the 85 and a quarter area. Now you look at the highs over the last 4 sessions, just under 85. People trying to just wiggle out as close to that area as possible. So right now you got 4 consecutive highs right there, and you're trading down 78 cents. So resistance at that former support here in Disney. One other newsy stock before we pick up with the ticker time. Mitch, give us the news on Walgreens Boots Alliance. If we're talking about not chasing stocks here, this would definitely fall into that category.
Yeah, definitely. So it looks like Walgreens Boots announced a leadership change with the CEO stepping down immediately. And so Ginger Graham will serve as the interim CEO as its search for a permanent CEO begins. And there's also some pre-announcement there on guidance, right, Dennis?
Yeah, they said it's going to be at the low end of 2023 earning EPS. Adjusted earnings is going to be at the low end of previously announced guidance. So, I mean, everything not good about this thing. The funny thing is it actually went down initially, then it popped because that's what they do. Nothing is simple for the shorts. And I just want to go back to what Joel was saying, not chasing stocks. I mean, there's a big difference, and I want to just teach this here, between not chasing stocks and buying dogs. When you're buying Disney or Walgreens, sure, you're not chasing, but you're buying absolute dogs. What I'm saying is not chasing is I'm buying stocks that are probably still in uptrends, overall strong, but buying those ones on the dips. I mean, Disney is a broken story here right now. Again, I don't think it's going to go up until somebody fixes it. Walgreens, I'm not even sure if anybody can fix this one. I think Walgreens is going the way of Rite Aid, and that isn't a good thing. I mean, Rite Aid's 77 cents now, trying to go bankrupt, I believe, for the second time. So, I mean, these are just disaster stories here. CVS has been a little bit better, but it's still sitting at all time. I mean, basically not, Walgreens at all-time lows. CVS is at multi-year lows here now, too. We're going back to 2020 pricing here, so 3-year lows. I mean, this is just not the place to be.
Let's go to an interesting one in the chat. I saw Spot being mentioned in the chat. We haven't talked about that one in a long time. Spotify Technologies.
I give them money every month. My wife's got the family account or whatever, and all of us
This
are
is
on
starting
it. It's
to take
fun,
off in the last couple of days.
And again, this is just a rebound in the overall markets. Maybe it just got too oversold out there. I believe that was earnings when they bashed it down, and then it leaked, and then we turned around, about 2 weeks ago in the markets, and this is really blast off. Now you start talking about getting into a gap area. I think there's major resistance up at 160 though.
Yep, that's an easy one there. Area you can move up to, really nothing in between there, up on a very light volume. And we're on Spotify. We have, I don't know, a couple thousand listeners or streamers on
Premarket,
I know
yeah.
someone was complaining that it wasn't being downloaded fast enough, so I don't know. I know I'm not doing it, but yeah, Spot looks like you got some room up, at least on the dailies, to 160.
Roku, growth name.
Roku.
Actually sitting there, and I've been looking at it. And I'm not the biggest proponent of this story, but the chart saying that it could get a nice little lift.
The chart
here.
looks good, Mitch. I'll give you the chart.
Yeah,
the chart's got that nice little hook that we talk about. It hasn't gone yet. I actually like the technicals on this one. I wish it wasn't Roku. I wish it was something else and not Roku.
This was like Unity. I think Dennis and I would be long already.
Yeah. If this was any stock that wasn't Roku, I would probably be long right now. It looks constructive. If I was shorted, I would cover right now because it does look like it wants to go. It looks like it wants to go back up to 90 to me. But the problem is I absolutely still just don't like the fundamentals of Roku. I don't like the story. I mean, people are saying, well, this is streaming, but we know everything's gone to streaming. I mean, this was the TiVo of streaming. And I just think you're not in that growth period here anymore. So, they got their own channel. They're trying to do stuff, but all their content's not good. It's not like Netflix. So I'm not sure. I like the chart, though. I do like the chart.
Remember when Comcast was going to buy them?
Oh
Is that
man,
I don't know who says that, but that was
It was a rumor. It was.
rumors start from whoever. That's the one thing is where do these rumors start from half the time? So they come from Wall Street Journal. We listen very closely. They come from other sources, and we're like, yeah.
When was that? When was the when did we ever let it wasn't during the Olympic. I thought it was like something during they were doing something during the Olympic coverage, but no, I mean you broke out over 80. I mean if things really get going here, a lot of monthly resistance at 100, but I'm sure you could find some intermediate points in between that in Roku.
All right. Shop really taking off lately.
It
And I
did.
think one thing that I'm looking for also is I know, Dennis, you've mentioned this, and it's okay. I think it's important sometimes to mention it, but I always like looking at Shop and Amazon together. And Shop getting going yesterday, Amazon getting going. It's on my radar for sure.
Well, Shopify's already went. We missed this move. This is absolutely chasing it if you're buying it here today. 70s major resistance. I think, this was the buy a week ago or 2 weeks ago. When we started looking at it, it was pulling back and we wanted it in the 40s. It didn't. We already complained about this. Then they announced a deal with Amazon and that was blast off, upgrade the next morning, and you're off to the races. It looks like if I was long it, I think you got room to 70, but I just think coming at this point in time is the definition of chasing.
Yeah, I'm just going to give an intermediate level ahead of 70. You are trading up in the pre-market 21 cents, but you have we're trading 66.70. I think if you got multiple highs at the 67.75 area, if you're looking for a target just today, you had 4 highs in that area before you broke down. We did look at this one. We were hoping for a gap fill, but I guess other people didn't have such low expectations for that one. And just to mention, I mean, you know what also has just been the chart's looking good. I mean, Amazon pulled back, almost filled the gap, and that's making a move back up. And what's just sneaky rally here is Google making a new high.
Never
for
sold
the
off,
move.
Joel.
Yeah. Hung out.
Never participated in the sell-off. And those are sometimes the stocks you want, where they won't go down when the market is selling off, and then they're the leaders when the market turns around. Sometimes you want to see that. When the market's going down, your stock's going sideways, that's great price action. And then all of a sudden she starts going. I mean, how can you argue with that? I think everybody, including myself to a certain extent, were nervous that Microsoft might actually eat some of Google's lunch. That hasn't materialized. And you know what helped Google was when Microsoft said that on their earnings call
Gradual.
that the AI growth was going to be gradual. And that was the green light go for Google as well, because it's telling you that ChatGPT wasn't taking over the world tomorrow. And here we go. You still Google everything. They still are dominant in search, with 90% market share, whatever the hell it is. So, I mean, is Microsoft and Bing going to eventually get a piece of the lunch? Maybe, but we've thought that a lot of times before, and Microsoft really has been able to eat the Google pie. So Google's still best of breed in search. And
you know what
Microsoft
Google has that Microsoft doesn't have, that anybody else, that everyone else doesn't have, which is about what probably one of the greatest buys is YouTube.
YouTube, yeah, unbelievable.
Yep. And now, Mitch,
what they pay for that?
I think like $5 billion or something like
less.
that.
Dig it up, Mitch. I feel like it was like 1.6 billion or something.
Oh man. Oh man.
How much Google? You can ask Google. How much did Google pay for YouTube? You can ask Google that question. 1.65 billion.
Oh man.
What is YouTube, you think, worth today? And obviously it's in Google, so what is YouTube worth today?
Oh, just get ready. You guys remember what's about to just happen.
NFL
Sunday ticket, baby. Yep. There's a reason why I'm long Penn and MGM.
Are you gonna get that ticket thing?
Hell yeah, Joe! I'm gonna get the Sunday ticket. Got to. I gotta watch my football, and I'm done with the red zone. The only reason I got the red zone before was because I couldn't get the Sunday ticket. Now the red zone can go to the side, and I can go and watch the actual games. Yes, this will help me be able to watch like Dolphin games that, I'm in Carolinas. Normally, I can't watch the Dolphin games. Now I can. And this is going to help a lot of people that, let's say, are away from their home team. Like, there's a lot of people that have moved, yet they still support their home team. We'll see what happens.
Lots of
Someone just
guesstimates on a YouTube valuation just from Google again. 160 billion, 180 billion. Somebody was saying it's worth 500 billion. I mean, on the low end, it looks like 160 billion is what they would estimate YouTube to be worth today if it was a publicly traded company. So that's a good 100 times your money there.
Wow.
Google, genius company.
Yeah, now they're TV too, right? And that's the major thing too. It's not just the videos; it's everything.
Yeah. Yeah, there's someone just asked real quick about
It's
AI
us, man.
here.
We're on YouTube right now.
Boom.
Yeah,
That's
taking over, baby.
Just someone asked about this AI here. Nice pullback. You had multiple lows in the same area, traded up 33 cents. I'd say make quick work of 32 here. The last two sessions high 31.84, 31.99. So got a little roadblock above 32. You get above 32, things open up. What else? We got the S&Ps here, still strong. Dennis, 27.25. Just off that pre-market high of 46.25. So the Labor Day rally continues.
Yeah, buy everything. Everything is up here today. The IWM is actually up more than was up more than the Qs. I'm not sure if that's still the case, but IWM is trading up here. Holy, my computer's running slow here. I need to get a Dell. Up 0.84%, and then QQQ is up 0.69. So actually, IWM's up more. It's across the board. Mega cap, tech, banks. You got airlines, you got oil, you got dogs and cats living in harmony. It's just a party for the bulls here today, which actually makes me nervous.
I'll say Sundays are for football and they are for families. That's what I think on Sundays. The chat saying that I should be studying the market. Come on, it's Sundays, guys. You don't always got to be in the markets. I think it's important to take a break.
You do, and this is something I never talk about there, but I don't like talking the markets on Saturday and Sunday. Saturday and Sunday is for family, sports, fun. I do some
Get the head right.
Get away from it, man. There's people who are looking at charts on the weekend. I think that's just, it's too much. We work hard Monday through Friday. Work hard, play hard. Play hard on the weekend. Don't worry about the markets on the weekend. I know Joel's got to get up at 6 o'clock to look. He's addicted, but we're not all addicts.
Not on the weekend. How the hell am I going to look on the weekend? It's
Sunday.
I don't.
6 o'clock. How often do you miss a
6
Sunday 6 o'clock open?
Well, that's not 6 a.m.
6 p.m.
That's
Sunday.
6 p.m.
When other people are enjoying their family dinner, you're like, what's Spoo's doing?
Yeah, because
you don't miss it. You don't miss it.
What? Well, you can look at the opportunities you get. Like the open, week closed yesterday. You open near the low. I mean, I can't
Weekend
battle
trader
these.
right there.
You can't beat these guys.
Did you know IBKR is going 24 hours now too? Interactive brokers, you can trade 24 hours a day on. Yeah.
Well, didn't TD Ameritrade try that too?
Yeah, well, they're doing it on ETFs. IBKR is doing it on everything.
Oh,
everything. You do it all.
Right.
Yeah, you
how wide are those spreads?
You can just go out there. Well, they'd be ridiculously wide, Mitch. Don't just go start taking liquidity. There'll be no market on a lot of stocks. Like it'll be open, but there's no bids. So you could buy that stock for a penny. Throw your penny bids out there, but they're gonna bust because there's still rules after hours. Remember, but. Yeah, IBKR is 24 hours.
Quick 30-second wrap, Dennis. You ready for the markets?
Yep, I'm ready. Oh, you want my wrap?
30 seconds.
It's an everything rally here today. Again, I'm not chasing here, so not putting on any swing longs here today unless it's something that maybe hasn't gone here yet. So I think don't panic. There'll be more opportunities, but have your list ready and buy the dip when we get it.
All right. We'll see you guys back on Tuesday. Don't show up on Monday. We won't be here, team. Just let you guys know.
I get a day off? I never get a day off. That's unbelievable.
Maybe you should do a show on Monday. You could just talk for an hour.
I never get a day off.
Isn't that what pre-market Oh, no. I forgot. We're here. I'll see you guys next time. Come check us out on Live Trading. right, team. I'll get you over to live trading right now. Sorry about that. Just had to check the redirect there. Starting up right in 2 minutes.